Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to those closing bells. Here to help take us beyond the bell, it's a global simulcast. Carol Massar joining us right now alongside Damian Sassower. Welcome to our audiences across all of our Bloomberg properties, television, radio originals, and streaming on YouTube. Carol Massar, the rate hike, not necessarily a surprise.
No.
The maintenance of QT, not necessarily a surprise. But some of the commentary by Powell and that overlap with the commentary by Yellen on the banking sector certainly causing some agita for the market.
I got to say, we're just coming off that Fed decision. I've been glued to the markets, but I've been glued, as you say, Romaine, to those bank stocks. I'm looking at the KBW Bank Index. It's down 4.6%. If you look at the regionals, the KRE, it is also down. The Spider S&P Regional Banking, it's down 5.6%. You know, Janet Yellen coming out and basically saying we're not considering insuring all uninsured bank deposits. To me, Damian, they're kind of dialing back a little bit that backstop we all expected.
Yeah, no, I mean, look, you know, all this talk about bonds and stocks, forget about it. For me, all the actions in the FX market, look, whatever happened to the U.S. dollar smile? The dollar is not rallying in the face of all this volatility, specifically on the interest rate side. It's been up 9 out of the last 10 sessions. It's up 5 sessions in a row. I mean, I'm sorry, down 9 of the last 10 sessions, down 5 sessions in a row. The dollar is getting weaker.
I get that confused, too.
Sorry about that.
Hey, it's been a lot today.
It's been a long day for me.
You know, on your point, though, too, I mean, we talk about this idea of sort of what we saw out of the commentary by Yellen. And I think it's interesting, too, because there was also conflicting commentary by the chairman of the banking committee who seemed to suggest that there could be some sort of blanket protection, at least something that he would want to see. All right, guys, we are getting the closing bells here in New York City. It is a down day, and it is a pretty big reversal from where we were just a couple hours ago, where the NASDAQ had actually rallied about 20% off of its cycle low, but now going to end the day down by about 1.6%, down about 190 points on the NASDAQ composite right now. The S&P 500 lower by 66 points at 1.7%. The Dow Jones Industrial Average lower by more than 500 points, or about 1.6%. And, of course, we have to talk about the bank stocks. The Russell 2000 lower on the day by 2.8%. We know, of course, a heavy weighting there in that space among financials and small and mid-cap banks, Carol.
You know, it's fascinating. The NASDAQ 100, wasn't it at one point a big bump up from the low, I think 20% from that December 28th low? So it's interesting that we had a headline like that talking about what, maybe another bull market, if you will, or, you know, a correction off of that low. And yet here we are looking at the overall equity trade. I feel like there's a lot of nervousness there, Damian.
Yeah, no, and I mean, for me, it's all about the fact that we basically are seeing all that all that strength in the fixed income market going out into the belly of the curve. It's really the 5-year, the 7-year. I mean, we're down 23 basis points across the curve pretty much, and it is something to take note of for me.
I want to talk about the bond market, but let's talk about some of the industry groups because it is red across the board, all 24 closing in negative territory. Semis almost made it into the green, not so much, though, closing a hair lower. Then you also have household products. You have tech up there as well. Staples down nearly 1%. Then you go all the way to the bottom. It's what we've been talking about. It's the banks taking it on the chin, down 3.5%, Carol, after Treasury Secretary Yellen said that they're not considering a broad increase in deposit insurance. Really took some of the momentum out of this market.
Yeah, Debbie Downer. Oh, go ahead.
Just real quickly, I just want to point out the swings from, because this flip-flop that we had, I think really needs to be pointed out here. 100-point swing on the S&P 500 from peak to trough today. This is going to make this one of the most volatile days, Carol, that we've had all year.
Yeah, absolutely. I think, you know, especially when you have Janet Yellen come out and make those comments after we had what some say, we just had Aaron Kennan on, say that Jay Powell did a good job in terms of the decision, the statement, and the press conference kind of all aligning, if you will, in terms of the message. But you definitely are seeing some confusion play out here in the trade and that volatility marking it. All right, so let's get to some of the individual gainers in today's session. NVIDIA definitely a standout throughout the day, topping the S&P 500 and the NASDAQ 100. This stock has been on quite a run, up 8 days in a row, up roughly about 19% or so, but finishing the day with about a 1% gain. The semiconductor company introduced new chips yesterday, supercomputing services during its annual developer conference. They talked about AI. You had a slew of analysts coming out and raising their price target on that. So that's why you saw certainly that one getting a bump to the upside. GameStop. We talked about it after the close yesterday. Certainly, again, we can debate the fundamentals forever, but nonetheless, a standout in terms of gains today, up about 35% at the close. The company did report a surprise profit in the fourth quarter. Big float, though, still, in terms of the short position. 22% of that float is shorted still. Carvana also up about 6% here, was up as much as 14%. Company offering to exchange up to $1 billion of bond principal at below par prices as it works out plans to kind of restructure its debt load. So,
and this is going to be the big issue for these types of companies that have to find a way to sort of restructure debt or not. And how do you do that in this environment?
We just talked with Aaron Kennan about $1 trillion of commercial debt that's
commercial
out there.
real estate, commercial real estate loans that are coming due within the next year. They're maturing within the next year. Well, look, for me, I mean, if you want to talk about equities and me being a Debbie Downer, I have to look at Petco Health and Wellness. Ticker symbol WOOF, down 15% today, 10% on the year. I think management is forecasting another 5 to 6 quarters of weakness in discretionary items, weak revenue growth, second straight decline in annual profit. And then it's Nike, down 2.7% today, still up on the year despite reporting better than expected quarterly sales and boosting its top line outlook. It missed estimates on profitability because of higher input and freight costs. And finally, for you, Katie, Coinbase, down 4.1% today. It's up 130% on the year nearly after rising 7 consecutive sessions in the crypto exchange's best move ever. BitDog failed to hold above the 28,000 threshold, and the 7-day rally of 57% is now over. So that's it for Coinbase. That's it for me.
And more volatility, of course, in the Treasury market. Once again, here you take a look at where the yields stand right now. We saw these big moves, and I think that's interesting. You talk about 23 basis points down on the 2-year yield. Similar story for the 5-year yield, even the longer end of the curve. You're down about 17 basis points out when you go out to that 10 and further out. The question, though, that I have here isn't so much about the level of yields, but about the volatility. 10 straight days now, we've had a move of 10 basis points or more, and on 8 of those days, it's been over 20 basis points, at least with regards to the 2-year and that shorter end of the curve. That's not something that's supposed to happen. So when you hear Jay Powell talk about price stability, I know what he's really talking about. But for the market, this is price instability, and it's scary.
You're speaking my language, Romaine. I mean, we're talking about what's supposed to be the ballast of your portfolio. To see this type of volatility, it just really speaks to how much uncertainty this is. And it raises a broader question of what is liquidity like in the Treasury market right now. We know that's been a concern for well over a year. Janet Yellen has spoken about it.
Is there liquidity in the credit market? Because last time I looked at a chart, it was fading.
Exactly.
And it faded a while ago.
I think Katie's talking about the Treasury market, Romaine. I mean, the $20 trillion beast where money markets have not kept pace over the last dozen years. So this is a much bigger market without a lot of buyers.
Yeah, so the volatility is certainly unusual, right? This is not something we expect from the Treasury trade, and that is certainly a new thing that's facing investors, and you do wonder how that just kind of unnerves them, and then you do wonder where do they go ultimately, Katie, if they're looking for some place to park some money in this environment.
It seems like the easy answer, the asset class that's been working, again, for well over a year, is cash. But on the point of the Treasury yield, talking about volatility, talking about liquidity, at 12 p.m., the 2-year Treasury yield was completely unchanged, only about a basis point higher. It was beautiful. That was the smallest move since March 8th, which was the day before what I'll call the banking crisis. But obviously, we've now broken that and broke decisively lower.
We've broken decisively lower here, and now it really gets to the question here of what's next. This really isn't about the Fed anymore. This isn't really about rates anymore. This is much more in the lap, I think, of the Treasury Secretary and maybe even the White House and, dare I say, Congress. But, you know, Lord knows we don't want to put anything in their laps.
Well, Romaine, you asked it. What comes next? I'll tell you what comes next. The Bank of England comes next. We got a rate decision tomorrow. We've got the Swiss National Bank tomorrow. They're going to, I think they're going to hike as much as 50 basis points. And then we've got the Philippine Central Bank overnight as well. They're expected to hike another 25. But it's kind of a dovish hike, Romaine, because the last one was 50. So that might get you feeling better.
Yeah, inflation's still a problem, no doubt about it. We know that. We heard that from Jay Powell, and global central bank's going to do that. But I have to say, on my radar is going to be what's happening to banks next. How does this story continue to go on? Is there more, failures, if you will, more problems at this point? And I think that's what's really unnerving everything right now.
I was looking at that PacWest deal a little bit earlier. Remember, First Republic still hasn't been resolved. And there are other banks out there, we know, that have also sort of raised their hands and say, hey, what about us? And at some point, this has to be resolved. If they think that they want to let the private market sort of handle this, which does seem to be what they want to happen, the question is, can we withstand that? As a broader economy, can we withstand that?
I thought it was interesting what Jay Powell said basically about Silicon Valley Bank and their management, that, listen, The central bank, Katie, right, has been telegraphing forever that they were going to raise rates if you go back a year. So that bank management, risk managers didn't catch this. And then you do wonder, all right, who else didn't do it?
To be fair, the supervisors didn't catch it either. And Powell did make multiple reference to the fact that it had been on their radar.
I'm confused. Is the San Francisco Fed not part of the Federal Reserve?
Well, I was going to say, they certainly put out, they said that there were problems, there were issues, but where was the follow through?
Well, I mean, I say there's problems all the time. I don't follow through. Just ask my wife.
Well, I mean, that's definitely one of the tasks forward for the Fed is how do they tighten those supervision roles that they have and actually catch something like this before it happens, even though they were aware of it.
Hey, P.S. Jay Powell's all for some more bank regulation. Did you get that out of the press conference?
Big time.
I did that. Yeah, big time.
Big time. All right, guys, more to come certainly tomorrow. We'll see how the market follow through goes into the Thursday trade. All right, that is a wrap. Our cross-platform coverage, radio, TV, Bloomberg Originals, and of course on YouTube, Beyond the Bell. We will see you again, same time, same place tomorrow.